From the morning reading, the major averages traded mixed, consolidating their gains from the previous week in the Dow Jones, the S&P 500, and the New York Stock Exchange, all recording new all-time highs. The Russell 2000 was able to climb back above its 50-day moving average as small caps outperformed. Internal breadth numbers continued to improve, though volume was extremely light ahead of the holiday. In addition, most of the underlying technical indicators continued to improve with momentum as measured by the 14-day RSI being positive for most of the different indices. The main concern at this juncture is the continued weakness and negative divergence of the Dow Jones Transportation Index. Transportation stocks broke support going back to October on Wednesday and fell further on Friday. The index is off about 8% from the all-time high and broke below the 50% retracement level from the move of the October 2014 low to the December 2014 high, which is negative. The sell-off is due to rising crude oil prices, but undercuts the ability of the broader market to move higher. The energy sector, XLE, has pulled back from its recent run, but found support at the 50-day moving average. Traders will be watching that support area, and if the energy sector fails to hold that level, the transports could bottom and again be a contributor to the broader market. Hello, this is Stephen Harris, a head trader from the Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:19 a.m. Central Time, and I'm recording this in preparation for the market day of May the 26th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in, see what happened in our overnight activity. A little negative. All four broad market indices are down, but a couple of them are essentially scratch as of the time of this cut. Now we do have pretty significant amount of macroeconomic reports, and some of those are coming out early today, so that could play into this. The Russell's down about 0.5%. The NASDAQ down about 0.19. Let's see, we've got crude oil down about 0.5%. Euro down about 1.2%, so that's a pretty big mover. You got bonds up about 0.5%, and then gold down about 0.81%. Overseas, China up 2%. You have Hong Kong up 0.92%, Japan up 1.2%, so all of Asia doing well. Germany and United Kingdom, though, go in the opposite direction, with Germany down about 0.5%, United Kingdom just a little bit less. In macroeconomic reports before the market opens, you have core durable good orders, and then during the market, you have the consumer confidence and new home sales. You have an FOMC member, Fisher, speaking today about the lunchtime. And then you also have FOMC member Lacker speaking as well. That will be after the market closes. And then on Wednesday, you have, doesn't look like anything from U.S. Now, you have G7 meetings. That could always do something. That would probably be the most important activity that would be occurring tomorrow. In terms of our volatility conditions, obviously with the holiday, things got really quiet. Look at the short-term VIX, down well below 10 at a 9.60. Skew has dropped. It's down below that 125 level that we consider a cautionary warning level. IV percentiles don't get much lower than this, 11, 2, 12, and 22. The Russell is just about as low as it gets in the last 52 weeks. And the Dow, we normally don't see these ratings get that low either. In terms of standard deviation moves, it's been very quiet. Only one move in the S&P in the last 2 trading weeks that was greater than a standard deviation move. So been very, very, very quiet markets of late. In terms of a regular daily report, Phase 3, higher highs, higher lows is the expectation. Market posture IBD is confirmed uptrend. GMI index a perfect 6 out of 6. Market posture is a very bullish, and indeed, if you look across all four indices, S&P very bullish, Dow very bullish, Nasdaq very bullish, Russell also, and above 50, and is solidly bullish. So everything is fine there, as you would expect with this portfolio, and active trader position sizing opinions are at 100%. In terms of the hedge warning level, we still have a 0 plus normal with cautionary aspects. Not a lot that is flagging for us right now. From the volatility standpoint, nothing is really coming at us except for this daily squeeze that's still present on the VIX, and we always recognize that with the caveat that a squeeze can persist on the VIX for an extended amount of time. Distribution day count very low. Nasdaq's at a 1. You have 2 risk off indicators that are flagging as risk off. Really, you could make a case to drop this to a 0, and I probably would if we had any more momentum and volume to the upside. We've had just this really dull bullish market moving up on a wall of worry, and while many of these indicators have lessened their warning statuses and everything really looks quite well, what's not reflected on here is that there seems to be, strong momentum and volume, as in institutional involvement with this bullish movement. It seems to be more about holiday trading and the like, as opposed to that we're in a solid, all clear bull market and load the boat up with everything that you can. So I'll maintain that 0 plus. In terms of the relative rotation graph, this could be taken as one of those warnings. I mean, look at these tails. They're all making big swoops to the downside. There just isn't an awful lot of strong bullish activity going here by leading sectors. In terms of sector market posture, we talked about at the opening from our morning reading about transportation. Very much a warning there. We also, and we take a look at our indices real quick here. Here's the SPX. We did get that breakout of the range, a nice candle here, but then totally sideways the rest of the week. And more concerning is what the Russell, yes, some bullish activity come up off the bottom of the range, nice candle here, but also, just very ho-hum through the course of the week. And from a relative standpoint, the Russell's so far behind the S&P, as is the Nasdaq, though the Nasdaq has done a better job of catching up. Thursday and Friday both much better activity on the Nasdaq than there was in the Russell. Now, if we start to see the Nasdaq make new highs, and it's not that far away, certainly much closer than the Russell, we start to see a confirmed breakout on the Nasdaq, then that will make us feel much better about this market. The Dow Jones, after setting the new high earlier in the week, really has not done anything for the bulls since. So you take this activity in the Russell, the activity in the Nasdaq, the activity in the transportation, and the lack of volume even on SPX and institutional involvement, though we do credit that breadth has improved somewhat during recent days. It just kind of puts us into this kind of unenthusiastic kind of bullish aspect. Telecom, energy also not participating, though quite a bit more green across the other sectors. So certainly things are not bad, but they're just not all that rosy. You see on Friday, of course, it was a bit of a weak day. Information technology was the only one that put in positive, and it just barely so. We call that scratch, and then down from there. In terms of if you're taking a look at your watch list and industry group level, take a look at retail, internet, healthcare, biotech, railroads. are the shadow trader top industry groups at this time. So that should be enough for today. As always, if you're finding value here, we greatly appreciate you liking us on YouTube and sharing with your trader community. More information about how we model many of these activities with our own trading in our Falcon Portfolio and Options Live Trading Chat Room can be found at this website, and we very much put to practice these kinds of things. We have a dynamically hedged core portfolio. We have within our trading certainly a number of individual strategies, and I highlight an IBD Top 50 ETF strategy and an SPX mortgage strategy. This is an option income strategy, as well as swing trading using both options and stocks. So there's a lot going on in here, and we treat this as a very comprehensive approach, and we report it in a very transparent way, and we get it that performance matters, and you can see that performance readily in the way we report on our trade journals and really everything we do from the entry of the trade idea all the way through to the exit. Free trials are available. Disclaimers, as always, just hit the pause button if you need more time to review these disclaimers, and we'll see you back here tomorrow morning before the market open for the market preview. Good trading.